All right then. Well, good afternoon, everyone. And once again, welcome to KoreConnect's KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and I'll leave it at that. Once again, we're excited. Obviously, we are only 11 days away from one of the most wonderful periods of obviously 2021, where Regulation CF, you'll be able to raise up to $5 million, Regulation A, $75 million. Everyone's pretty excited. Lots of great things happening. Today, we're going to have a great discussion around all this. And I am joined by some panelists that you have seen here before. You know our format. We're here to chit chat, argue, hammer ourselves down, have toothaches, of course, along the way. And hopefully you'll get something out of it where it'll be educational. So first of all, let's start with our new guest. We haven't had you here before. Brian, please introduce yourself.
Yeah, thank you, Oscar. It's great to be here. My name is Brian Belay, and I founded crowdwise.org, which has primarily been focused around helping investors in the equity crowdfunding space learn everything they need to know to get started, as well as helping the issuer side. So I also sit on the board of the Crowdfunding Professional Association, and my background is a little interesting because I actually came not from a finance, not from a startup, basically completely outside of this industry. My formal background and training was as an aerospace engineer, but I was always interested in investing in alternatives. And so when the Jobs Act kind of went live finally in 2016, as a non-accredited investor at the time, I was very interested in learning about that and figuring out, what is this ability to be able to invest in early stage companies. And kind of when I got started, basically was kind of frustrated because there wasn't a lot of educational material at the time. And, the industry has been coming a long way in recent years. And, Oscar and KoreConnects are doing amazing things on the educational and putting on content and webinars like this. So kudos to you guys. But basically where I'm at today is, looking at it from the investor side of things. I'm an investor in over 130 RegCF companies, as well as a number of Reg A and a few kind of sprinkled Reg D deals. So have looked at just, tons of pitch decks, have been very involved in the space and continue to put out, educational content myself through Crowdwise. So it's great to be here. Thank you, Oscar.
You like the Sandra? You never saw that coming, huh?
No, I didn't realize. Yeah, Brian is invested in 130 deals. That's
See,
pretty
there you go.
Very
There you
cool.
go. This is the dynamic, and you should lead with that, Brian, because I think we need more people. We need to hear from people like yourself. And but please, Andrew, before we get started.
Well, it's funny that I've invested in a bunch of deals in the last month or so, testing the processes, but when I hit the invest button, I have the intent of going through and investing. So if I go on a platform, I have to find a deal I actually like. Even if I'm only going to throw in $100, I don't want it just like completely thrown away. So, essentially critiquing the technology is my initial purpose of going, but I have found some decent deals. So I am happy about that. Now, I generally find really good deals, and the deals that I believe are really good are deals that my firm is working on. So there's a definite prejudice there. We look for deals that we believe are not fundable, but will raise 100% of the money, whether it's 75 million in a Reg A plus or 5 million in a Reg CF. So I'm Andrew Korn, like it says on the screen. I am the CEO and founder of E5A. We are a systematic, data-driven investor acquisition firm. It is our job essentially to bring not eyeballs to the offering page for people to then assess a company, but the right eyeballs to that offering page. So we actually have a ton of data on affinity groups, and we have internally our own database of about 1 million angel investors. So when you hear angels, it's like, oh, so they're all accredited. It's like, yeah, I'm an angel. I'm fairly active angel in the New York City area, primarily in fintech. And I'm actually a qualified investor. So none of that, though, prevents me from going into a CF or an A+, which I enjoy doing. And the beauty of the C+, of the CF and the A+, is that I don't have to prove it. I don't have to go through a lot of paperwork. It's a really easy onboarding process. So that's something I'm really enjoying.
Yeah,
Well,
if you don't
that's
mind,
great.
can I just kind of add one thing to what Andrew was saying? I think that's one of the amazing things with CF and A plus now is, while I say I've invested in, 130 plus deals, that doesn't mean I'm investing at the level, that a traditional angel would be writing a 25K, a 50K check, right? It's a lot easier to get in, to get, a little bit of skin in the game before you kind of get comfortable and you want to start writing, if you want to start writing bigger checks. But if not, it's a great way to diversify. And, as we know with early stage investing, diversification is key because the types of power law returns that early stage companies will have. So I think it's really interesting what it's unlocking.
I agree. And actually, because of the pandemic, I asked my wife I had to find the right words there, asked my wife to look over my shoulder so I could show her the folder where all of our private investments are. And they range from, I made one for $100 yesterday, to 6 digits. So it all depends upon what the opportunity is and what makes sense at the time. But diversification and the ability to go into multiple deals, it's one of the beauties of why RegCF works for everybody. There you go, Oscar.
I do hope it does, and I believe it does. And
well,
it's
I'm going to take
like
the other side on it a couple of times today.
Yeah,
so.
of course. Of course we will. Obviously. So first of all, I'm just gonna. I think it's important for, regulation CF is getting a lot of conversation piece right now. I mean, this morning I was doing one in Europe with the equity crowdfunding over there, and it is amazing how we still have a misguided view of how these regulations work. And I just want to touch on that a little bit because I think it's important that we touch on that so the audience listening in to understand the benefits of it is that it's not a wild, wild west. It does have a regulatory regime to it, which is really important that companies need to go through. And Andrew, you've had now a few companies. You didn't work with RegCF before, and now you have, and you know what they need to go through. So if you could just touch on a little bit of that, because it ties into the benefits to everybody else from the investment side.
Yeah, so, RegCF is a much simpler process than Reg A+. The auditing requirements are less, the legal requirements are less, there's no back and forth with the SEC. But if you are going to do a RegCF through one of our favorite platforms, you're probably going to go through a due diligence process, and it's going to be way more rigorous than you were expecting. And that actually is a good thing. If you do that and earn that badge of honor, and potentially soon a t-shirt, because my firm is putting together some t-shirts on this, I have to embarrass the law firm, right? So, if you go through that due diligence and you get listed, it's not just like anyone with any business can just say, gee, I'm going to go and raise $5 million on a RegCF platform. Now, let's start with, you have to be on a platform. You can't just go to a broker dealer or just go on your own webpage and say, I'm going to do a RegCF, file some documents. There's a bunch of things that one needs to do. There are now upwards probably of 100 of these platforms. Maybe it's only in the 80s. Oscar probably has a better feel for that. But I know that there are actually platforms that are doing the CF right now. So people are raising money to have their own CF platform. So there's a lot going on. And there, I believe, is a lot of confusion of what it takes, what the criteria is, and what it will take to really have a successful raise. And then there's the question, should I raise $5 million because that's the limit? Or should I be raising 2.5, and why? And, what's the right number for me? And thankfully, I learned only this week about Brian, and I read his website and was impressed. So thankfully, there's a bunch of education out there.
Yeah, it's great. I mean, he, unlike many investors out there, he took the other initiative. He figured that as he's going through his journey, and we'll get him to speak of it, but and he started creating Crowdwise. I believe that's the name of his platform. But I think it's important, you touched on it, a company needs to go through a due diligence. So this is it's taking that, not taking it away, it's taking that extra notch that you don't need to deal with to say then, what are the benefits? Is that you can now look at an offering knowing that it is through a registered funding portal, meaning that FINRA, went through the qualifications and all that to be able to place the offering. So when you, Brian, landed there, you only need to look at the merits of the opportunity. I'm really curious, on your first investment, did you know that? I mean, did that even cross your mind? Or you just said, I like that and I'm putting $100 in without knowing?
It definitely was a learning process, and there was a bit of a learning curve to it, because even depending on each of the different portals out there, they all have different approaches, right? In terms of how much due diligence they might do or whether they're curating deals or not. I think as an investor, one of the most important things is really identifying what your investment goals are. Because going back to your point, Oscar, some of my first investments were investments I was making because I was excited about the idea, the product. I wanted to be a part of it, while still trying to figure out what is a good versus maybe not much of an ideal, investment opportunity from a pure ROI perspective. So people invest for a whole bunch of different reasons, right? And I think, again, that's one of the reasons why RegCF and, Reg A as well unlock so many different opportunities, because there's going to be the investors who are looking for that, financial diversification for potential ROI, perhaps investing in higher potential growth companies. But there's people who want to invest in their friends. There's people who want to invest in causes and ideas and businesses that they believe in. And RegCF unlocks and makes all of that available. So, going back to your original question, I think it was a mix of reasons when I was really starting out investing. And even now, on a deal by deal basis, it does vary in terms of when I'm assessing an opportunity. Am I investing in this purely because I think there's a lot of, upside business potential, and everyone likes to make money, right? We don't want to invest in something that's, gonna kind of go broke or not do well. But at the same time, there are just a lot of those other reasons to invest. So it's really important to understand that on both sides, as both the investor and the issuer.
I'm curious about something, what I didn't hear, and I'm curious from your point of view on this, is that I didn't hear you were looking at the opportunity. To you, did you think in the back of your mind in the early days, or is this a platform I can trust, or was it really the issue? Like where was it drawn to? Where and now compare that to where you are today? Because I'm curious. I mean, look, to talk about the benefits, you got to be in it. And Andrew said it best. He's doing it for a different reason. He's testing out investment processes at a cost at $100 each. Come and test mine, please. So really interested to hear your point of view on that, Brian.
Yeah. So, I think the answer is for me personally, I wanted to invest to diversify my portfolio, to expose it to kind of a different asset class, and I might hold, through public market stocks, bonds, real estate, that type of thing. So I really took on a lot of that burden of the due diligence and wanting to make sure and verify that a certain opportunity was up to a level of standards. And again, starting out, I didn't know, which of these portals and platforms had the different processes in place. So I really was kind of just looking at it on a deal by deal basis and trying to assess, do I think this is a good investment opportunity? Now, having, the bare minimum checks that are kind of required through RegCF, kind of the bad actor checks and anti-fraud, that type of thing, it was good to know that I didn't have to go and pour through different volumes of, their legal paperwork and look at their incorporation documents and a whole bunch of other things. But what I really was then able to focus on was, what's the business opportunity here? What's the investment opportunity? I think, one of the other unique things that RegCF especially unlocks, if you think of just comparing RegCF versus maybe, a private placement or something done under Reg D, is that you have this crowdsourced due diligence available to you now. I think these Q&As with the founder that are available on the funding portals is such a crucial part of, every campaign page, because instead of having perhaps, a handful of angels who are investing a deal and probably doing, kind of their own due diligence to figure out if they want to invest, you now have hundreds, if not thousands, of potential investors from all walks of life. You got, people who are perhaps from the industry, people who are users of the product, people who, are coming at it from different perspectives, and just being able to see all the questions that they ask the founder, that has added to my knowledge. And that is something that's really been important when I assess a deal, for sure.
So,
Interesting.
Yeah, I want to take the other side of that. So I have been on the 3-4 big portals, and I have used them all, and I'm kind of appalled by the whole process. I'm like, so let's take a step back. I started my career writing IPO roadshows for major investment banks. That was my first job. I've run an RIA, I've designed exchange traded funds, and I've managed billions of dollars as a portfolio manager. So I have a whole different perspective on due diligence, et cetera. And one of the things that happens is on these portals, there's not a lot of diligence done. And, nefarious people could easily put stuff up and get through some of these portals. So my company doesn't really want to work with any of those portals. And for a variety of reasons, a lot of it has to do with technology that won't work with outside marketing as well. But when you go through a portal that's actually run by a broker-dealer, then the broker-dealer is all of a sudden responsible for all sorts of background checks way beyond what the portals are doing. So when I go and I see one of the big advertised portals and I see a company there, I'm assuming, hey, that's a seal of approval. But is it? A lot of them is they are bring your own investors, and until you hit a certain level of money coming in, we're not going to help you get any investors. And I think that's not the best business model. I think they should be helping companies to get investors. That's what they came there for. So there's a lot of things I don't like about the portals. And, there are some anti-portals out there, meaning where a CF can list on its own. And as long as it's hosted by the broker-dealer and the broker-dealer is certified to do CF and A+, et cetera. And then they're going to go through due diligence that I think now I don't have to worry about it. And I can just look at the investment thesis and the management and traction, and also believe the numbers, without having to worry about was anything fudged, because the books are only reviewed. They're not actually audited in the CF. So some of those things are pluses as well. I mean, don't get me wrong. I think it's great that you can get a C+ launched way faster and it costs less. And all those things should be true because odds are you're raising way less money. But I do have my concerns with, we will be launching 4 $5 million CFs on or around the 15th of March. But these are companies that have gone through extraordinary scrutiny by a broker-dealer and others doing due diligence. So I'm confident of that.
Yeah, that's an interesting point that, we've the whole idea of the funding portal, a lot of people think that it was to be kind of the gatekeeper or the due diligence portion. And in actuality, if people actually understand, the funding portal is not allowed to do that. So in many ways, the only thing that the only part that they're required to do is, I don't even want to call it KYC, but to make sure that Brian is adequately enough to invest in the company, hasn't exceeded his limit. And I wonder now, as you say, we're increasing this to 5 million. This is real money now. Not that 1 million wasn't. Please don't misunderstand that. And now the broker dealers are getting involved, and they're going to do that because they don't get a pass. Like I've learned a lot this weekend. When a broker dealer wants a funding for, oh yeah, I'm just going to operate like, WeFunder and Repub. No. You are a broker dealer. You don't get a pass on due diligence. You don't get a pass on KYC, ID, and AML. So in one part, it's going to be better for the investor because it's going to provide that additional due diligence. And I wonder if the platforms are going to recognize that. Otherwise, they're going to be only getting the deals that do up to 1 million. And then the deals that are doing up to 5 million, they take on a greater risk. I'm wondering about that. Obviously, this is to benefit everyone. And the important thing is the market is opening. I mean, this is the bigger part of this. So let me ask you that, Brian. I mean, look, this is an interesting scenario. You are actively involved. You're an investor. That's how you and I met. And so for you, the attraction to the company, if it was all on its own, like a Reg A. So try to imagine a Reg CF now, like a Reg A, and you know there's a broker dealer in the background. Does your level of confidence to invest make it better? Does it give you that extra confidence in that I'm just looking at the merits to what Andrew's saying, or is the platform, the hype, the activity? That's the part that you need to be part of.
Yeah, it definitely, having a broker dealer or some more rigor behind the deal for sure removes some of that, potential concern and the potential additional due diligence that an individual investor would have to do on their own. There are, a lot of kind of different resources out there for people and potential investors as well, right? From kind of investment newsletters where they might kind of help with some of this, or different, rating services that are just additional resources and tools. Again, nothing should be, making a specific recommendation for a specific investor, because they can't do that. But what they can do is, provide additional ways of scaling some of the due diligence. Let me give an example, right? Again, going back to, if we're thinking about like a private market investing example, if you're writing a bigger check, you probably expect / demand require an in-person meeting, or in today's world of COVID, at least, maybe a Zoom interview, right? But you're probably going to want to meet with that founder, talk with them one-on-one, kind of get to know them before you make an investment decision. Unfortunately, for the most part, something like that isn't possible when you're doing a Reg CF deal. It's just not, reasonable to expect that a founder would be able to meet with hundreds of potential investors. So how do you kind of get that same, assessment of, like, without being able to see this founder, like talk with them, how do you kind of be able to assess them as a person when so many angel investors will say, team, that's one of the most important things. So I think that there are some of these resources now where, for example, if someone happened to do an interview, and as part of like an investment recommendation, or, kind of a newsletter service, you can have one kind of interview with that person and then perhaps publish it to the audience, and it allows it to scale a little bit more, right? So I think there's kind of ways around some of these, due diligence, call them pitfalls, or just differences in Reg CF. But another important thing you said that I want to, touch on, Oscar, too, is yes, when this cap goes up to 5 million, we're probably going to be getting increased additional scrutiny, right, on this, because kind of up to $1 million, it's a good chunk of change. But now that we're going up to 5 million, that's some real money, and we're going to be attracting a lot more potential people who will want to leverage that from the issuer side. And of course, whenever there's kind of any money in the market and stuff to be gained, there are potential bad actors who might be kind of around that. So how do we prevent against that? And not to kind of like use a trite saying, but from Spider-Man, is with great power comes great responsibility, right? We're going to have to, going to Oscar, I think you guys say this, but we're going to have to level up as an industry, and in terms of how we're looking at companies. The investors are going to have to level up as well, because the stakes are going to be raised. So you just got to kind of add that due diligence to your process, I would think.
Yeah, I think it's a big. I mean, I don't think people realize it, but there's even classes, they say once you reach $1 million, that's one. But to go to 5 million, it's not the same. And it's funny, I was actually reading a book about this, just to remind me again that even in sales, I mean, in revenue, when they tell you you're scaling your company, these are different, and it takes a very different approach. So you're right. I believe we all need to level up. Andrew and I, and the ecosystem that we have created for not only Regulation C, Regulation A, it's now including Regulation CF. We believe it's equally the same. That's one confidence that I see from the outset, is that the broker dealers are going to be adopting the same style of investment process to the investor as they do in Reg A. I think that's exciting. To me, it gives kind of a standard, which means that for people like yourself, Brian, who, hey, I invested in Reg CF, I know, and in Reg A, wow, equally the same. They're asking me the same information, except that in Reg CF, there's a calculation there regarding my limits. But in Reg A, as you know, you can keep investing and investing. It's not a problem. And so I'm pretty confident, but I agree. I think it's a great benefit for everyone involved as investors and customers of companies to be part of this. The reason I started this way is because I want people to, based on the conversations I've been having lately, it seems like we're all so happy over here, we're forgetting to tell people what it took for them to get to here. And that's not to say that this isn't a benefit, why everyone benefits from it. It does. You're benefiting from all of these parties that are getting involved and to allow you to freely invest. So Andrew, it's interesting to me, to be honest with you, because, since I've been involved in this 11 years, 5 years ago, 6 years now, when RegCF finally got launched, or in a way it's going, a lot of people dismissed it. A lot of BD said, this is not for me. It's not my cup of tea. It's kiddie land. And now they're frothing. Down, boy.
Yeah, it's very true. And I will admit that I'm frothing. We actually have an issuer. We're doing a CF, and an A+, will launch weeks later because it's a backdoor way of raising 80 million. The 5 and the 75. So if you have a truly qualified issuer and they could really put all 80 million to work, then actually it's a great way of doing it. And for this particular issuer, it's just a test. If it works, they'll raise 80 every year or more when they raise the limit. But I want to go back to one thing that Brian said, is that there's a bunch of third parties out there that are assessing deals. And I would love the investors who are watching this to be very careful and find out what the relationship between the issuer and the newsletter is. Is it a pay to play? Did they pay them to write about it? How independent are they? What's their background?
Are they using the First Amendment, or are they actually qualified?
Yeah, there's a website in public equities called Seeking Alpha. And I've got about 190 posts there, but none of them in the last 10 years. I used to post all the time when I was a full-time money manager and ETF designer. And I remember one time they didn't instantly post what I wrote, and I emailed them and they said, we're reviewing it to make sure, I forgot whatever it was. And I said, I manage billions of dollars. The average person here manages $4 or $5 million from their basement. People may want to know what I had to say about it, being that we might move the market on this particular stock. So know who the author is and where they're coming from. So I want to flip that, though, because there's a company out there called Estimize that does estimates of things like earnings estimates. And they'll have some kid doing it from his basement who doesn't even have an undergrad degree, but maybe it's aerospace, and his dad's an aerospace engineer, and he's going to be an aerospace engineer and knows everything about the industry inside and out and actually has great insight. So the size of something isn't necessarily, it's the expertise is what you should be looking at. And then, of course, what the motives are. Are they aligned with you as an investor, or are they aligned with the issuer? So anyway, then I want to get to the 5 million. Yeah, firms like mine completely ignored RegCF. At $1 million, it was a great way for people who don't have friends and family of means to be able to do a friends and family round, kind of like a big seed round. And maybe you'd only raise 500,000. And that's great. More power to you. I was thrilled about it like that. But not something you'd hire a firm like mine for, because your cost of capital will be too high. At 5 million, now we're at a place where it can really make some sense. But as Brian said, with this comes great responsibility, which is why we say no to more deals than we say yes to, even though they're hiring us. We believe most of the time when we accept a deal that they're going to raise all the money. So we want to make sure, what's the path to liquidity, and what will investors truly get, and is it a deal that is something that will make the industry proud that it's been funded. And I don't care if they make organic vegan soup or something in aerospace, which we happen to be involved in one, but it's an A+, not a CF, to essentially ways of investing in what would be a venture capital fund, which who the heck has access to that unless you're a qualified investor or an institution, which you can now do for $1,000. So, and it can be all ESG as well. So, these types of niche investments and what it's being open to, it's all great. But then one last thing, also investor beware, someone may have a great idea and understand what the trends are right now, doesn't mean they can execute. So you need to really look at that team and make sure that there's an org chart and there's a person for every box and they're all capable of doing those jobs. So, most early stage companies fail, but what I love about the 5 million is at $1 million, one of the things for me as an investor was you're not raising enough money to make it to a milestone. You're going to be raising money again too soon. It can be a full-time job. So at 5 million or even 2 million or 3 million, whatever the right number is, you can fund and be part of funding the company where they can really get to the next plateau. One more point, and then I will turn it back, is companies will come to us that we're going to do an A+, and we say, take a deep breath. Your pre-money valuation is going to be 15 million. You can't justify more than that. So they're not super early stage, right? But they're at 15 million. You don't want to go raise 25 and sell well north of 50% of your company on this one offering. So we now are advising to do a $5 million A+. Now your pre-tax, your pre-raised money was 15, your post is 20, right? Because you just raised 5. Go and build your business more. Make it so your valuation is 50, and then let's go do a $75 million Reg A+, or whatever the number is that you need. And maybe it's not 50 it goes to, but hit milestones and raise your valuation. So it can really, really work there.
That's great, guys. I mean, it does give that language, everything's going to change, I believe. The value proposition is greatly going to, the more companies we go through, both the funding portals, more funding portals arriving, and we're going to see some more data coming out of it. But I think I agree with you, Andrew. We're still in the early stages. We need to be very careful as to when you read a report. Aggregation of information that's already there and you haven't touched it, that's different. I'm all for that because that's all that is aggregation. Making it easier, like CrowdTide. It brings everything into one site. They don't provide opinion. It's just a link back to their platform. So it makes it an easy landing spot for an investor to go to. We've been talking about research. There are a couple providers already in the space, and it'll be interesting to see. We don't know yet. We know already in Reg A the consequence. We already know that. We already felt that immediately. So the question will be how this will be utilized under RegCF, because we do see it there. And when we have very naive young entrepreneurs on one side who could get on it and be at harm. So it's a benefit to everyone in this regulation, but there's still a lot of areas we're all working through in the kinks, and those kinks are getting better and better. I mean, 3,600 companies have gone through this already. So this is it's a testament that it's just getting better and better. I mean, I look back in 2015 or 2012 when people were first designing the platforms, they're nothing close to where they are today. So it just goes to show you momentum creates change, and change is good. And because we're constantly assessing the market. So let's change the dialogue a bit now, because we talked a lot about what it takes and the values, but obviously the conversation is around the benefits, right? Who, not so much the benefit, who all benefits. It's not just Brian, right? So Brian, I mean, you benefited from an investor, but there are other benefits to using Regulation CF beyond that. And if you could share some of those comments as well.
Yeah, so I mean, I'll just add on a few other benefits from the investor perspective, but then, yeah, we can easily talk about the benefits to the issuers and those raising capital and the benefits to society and, from having all this additional innovation that we didn't have before. But so going back to the investors, right? There's, in addition to the capital investment, some of these companies offer some perks. So perhaps, it doesn't always have to be a high growth startup too, who's looking to be venture backed in the future. Some of these deals may be rev share deals where it might be, a microbrewery down the street that they want to turn their patrons and their customers into investors, and maybe you get discounts. So, there's kind of, sometimes this is going back to the reason, there's so many different reasons why someone can invest, right? It's not just always a purely financial ROI. Do I think this company's going to have a liquidity event or an exit, down the road? Now, in addition to that, too, you can think from an investor perspective, being a part of some of these companies can be a great way to network and, kind of improve your business acumen, right? So let's say I have an interest in, I'm an aerospace engineer, but maybe I'm going to invest in a neuroscience company that, maybe I didn't know much about before. But by being part of that team as an investor, getting the updates, I'll be learning more about the product, about the industry. And it's a great way to really kind of what we were saying before, just get a small amount of skin in the game, $100, $500, $1,000, whatever it is. You can really kind of help you focus your attention and improve your business, your networking, or different things in different areas. Now, so, kind of talking the investor side, there's obviously a whole bunch of benefits to the investors. The issuers have just so much to benefit from RegCF and Reg A+, right? So we always throw around the term kind of democratization of capital, right? And access to capital. It's unlocking, new sources of capital from non-accredited investors that either wasn't possible before or may have been possible, through some different regulations, but really was more the exception than the norm. So it really just makes it more mainstream accessible, I will say. Now think about what that means long-term, right? So these issuers, are not just getting capital. You're getting brand ambassadors. You're getting brand champions. You're getting people who are going to be helping you kind of get some of that early traction. A lot of them will be your customers, or a lot of them will be people who invest in you. But what is a bigger, basically investor? What's like a more positive sign than having someone say, I'm going to invest in this company because I believe in what you're doing, because I believe in the long-term potential. That's more than just a transactional, I'm going to buy your product. This is saying, I believe in you, I believe in your idea. And like that itself is a great source of traction for issuers. And, they can not take advantage of that, but they can leverage this in a whole bunch of different ways. I've seen many of my investments reach out to their investor bases and say, hey, listen, we need an introduction to so-and-so. We need, what do you think of this idea? What do you think of this new feature? So you can use them almost as a crowdsourced specific source of feedback for your product, for your business, for a whole bunch of different things. So tons and tons of benefits, obviously, for issuers. I think I could continue going on, but to just take it one level past the issuers, now let's talk about the potential benefits to society. So we've all, seen the different statistics about VC-backed companies and whether it's 97% white male or the different stats, right? What this does by kind of opening up basically the kind of private capital markets and the ability to invest in some of these early stage companies is the few people, these venture capitalists, which have, very good impact in a lot of areas. And I don't have anything against venture capitalists, but these unconscious biases come into play. So instead of having a small group of people who are kind of controlling which companies do or don't get the chance to try a product, right, and market and see if they can make it, you now open it up to the world of all these different investors from all these backgrounds and perspectives and cultures. And I'm just really excited when I think about, what this looks like 5 years from now, because we're going to see companies that perhaps didn't look like that, Mark Zuckerberg or anyone else, that we use these pattern matching to try and see, oh, well, these types of companies were successful in the past, but what if it's a completely other company that wasn't even on anyone's radar, and that ends up becoming the huge company of tomorrow? So that's why I'm really excited about RegCF. And as you can tell, there's just benefits all across the board.
No, I agree. I think we're just scratching the surface, and I think this is one thing that we continuously try to educate everyone. The visibility we have into the private markets, the entire private markets, is on less than 2% of companies, and that's pretty disgusting. I'll say it the way it is. It's pretty disgusting, because it's a it doesn't give you the scope of all the companies. It only gives you that. And I remember when I first reached out to these two providers, there's only two providers that provide this data for the private markets. They wouldn't track this space because they can't validate the funding. And I'm like, you've got to be kidding me, right? I mean, the platform is registered. So, the industry did it, but that's just RegCF. What about the Reg A's? What about that? If it wasn't venture backed, they wouldn't. And that's unfortunate because there are unicorns and not every company needs to be a unicorn. This is another aspect of it as well. We're going to have unicorns. I know we are, we already have. And now, but the question is, do you need to be? You don't. You could be the local dry cleaning shop that Andrew Korn relies on, that if he doesn't get the next $200,000 during COVID to survive, Andrew's going to have to walk another 30 blocks with his little dog named Jennifer to take his laundry instead of downstairs. So my apologies. So it makes sense for Andrew to, come in and provide that. And here's a mechanism that so there are many, I agree with you. There's a society gain by it where you wouldn't have, this is not a type of business that I would typically invest in, but it's affecting my personal life and my way of living. I like it. And if it helps, great. And I get a return, that's even better. And then there, of course, there's the bigger upside. And that, I believe, is the beauty of the Jobs Act and Regulation CF, is that if you can see it for its grand scale, it doesn't stop here. It's a journey going on to the next stage. And so for me, that's my takeaway. Obviously, Andrew, I'd love to hear your takeaway on that.
Yeah, well, there's a bunch of things that were said that I want to either expand on or underscore. And one of them is going to the benefits of society that Brian, I think, very eloquently said. But I can take that all the way down to community and to the dry cleaning example that I've used before that Oscar just did, because if there's a dry cleaner and they want to have 3 of them, that's a lifestyle business. That is not something that's going to be a unicorn and go public and be a $1 billion business. But that doesn't mean that they're not going to, that the woman who's running that isn't going to turn that into a thriving business and share the profits with the people who invest. And if it's part of making a local community or revitalizing a downtown, where would they get the money from that except from the community itself? So, I think that this is absolutely fantastic. And, one of the things I'll say, because, now that some raises have really been done and some sizable raises have been done, I've gotten some calls from the Wall Street guys. And I'm like, yeah, stay out of this. You don't want to have anything to do with this. And the reason is that they're used to going to 6 companies, pension funds, unions, whatever it is, and getting something funded. Well, the first thing I say is, your cap table is going to have, if you have $100 minimum or a $200 minimum, do the math on $5 million. You're going to need a bigger boat. You're going to need a killer transfer agent, or you're not going to be able to manage this. So the first reason why you want to do a CF is you want a lot of shareholders. And I love that. And I say it slightly differently than Brian, but I'm saying the same thing. Do you want 3 analysts at a venture capital firm to say, yes, we agree, what you're doing is great, and write you a check for $5 million? Or do you want 5,000 people to say, we all think your business is great, and we're all going to write you a check for $1,000? So depending upon what your business is, I would rather have thousands of people. So to me, that's a great thing. And I have been viewing this and loving it with A+. Not every company wants that. And by the way, none of the people in the CF are asking you for a board seat or preemptive rights or any of the other things that VCs will ask for. VCs serve a great promise. And I can say this, and it's not even a joke. One of my best friends is a VC, but they're not for everyone, just like CF and A+ is not for everyone. If you want to do an A+ and you don't want 10,000 investors, you're in the wrong place.
Yeah. You walked in the wrong door. It's
Yeah,
time for you to
totally.
just,
Yeah. Your name tag, your name badge is the wrong color. You need to leave and go across the
you need
hall.
to leave. No,
Yeah.
I agree. I think it's, it is interesting. Sometimes, we've talked about it, the benefits of the company and all that, but there's another benefit. None of you touched on it, but I'm just going to bring it up. I mean, think about it. Here's a company that it was two entrepreneurs getting started. By using this regulation, all of a sudden they are able to hire more team members to grow that business. So that job creation, what's the multiple of that? Meaning, I there was only two, now there's 10 of us, and I know we're going to be tracking it at CoreConnex. We're tracking from our seed round to our Series A, and then doing our Reg A, what the impact does, because that's the true impact, right? Because that brings, coming back to David Wheel, he drove it up my head this morning, and it's so true that the Jobs Act, the economy can only be stimulated through growth, and growth only comes from small companies because they create jobs. Fortune 500 companies are great, right? But that's not where the economic growth is. So, so what's important about that is that there's another great society element, that people will be employed by these entrepreneurs and be able to grow. And today I was talking to one of our other clients, Legion M. I mean, I believe, Andrew, you know them. They are a client that went from RegCF and then Reg A, RegCF, Reg A, RegCF, Reg A 7 times. I mean, and they're growing a community of ambassadors, and they probably started with a small group of staff, and look where they are today. I think that's wonderful. That's also impactful, along with what they're doing. Isn't that interesting? I mean, how often can you say that?
Legion means strength in numbers, but also they're in the entertainment business. So if they wind up with 1 million shareholders, which I know is their long-term goal, and I love this company, by the way, they, when they put out a new movie, how many shareholders are going to go see it? How many of them will bring a friend? How many of them will buy popcorn? This will stimulate, enormous amounts of growth. And as you said, I believe all three of us are job creators. That is one of the fun things about running a company, is telling someone that they got a job or a raise or a bonus. It's one of the most fun parts. So, knowing that you're part of an industry that's creating jobs is definitely very fulfilling from my perspective. And not something I ever lose sight of, by the way, even if not brought up.
No, it's great. Obviously, did you look at that part? Brian, from your perspective, like, even though your check was only $100, but if everybody accumulates it, what did it do? It lifted this company to hire another person, right?
Absolutely. And I think there's another aspect to that. So there's the capital, right, that's allowing you to hire someone else. But the number of these companies that also reach out to the investor base that say, hey, we're hiring for a developer role, for a biz dev role, for something else. You now have, kind of 1,000+ job boards through all these connections who have a vested interest, right, in helping that company out. And if they have a really good friend or a brother or a sister or someone who meets that role, they're probably going to reach out and refer them to them. So I think it helps from the actual talent acquisition hiring process as well.
Yeah, join our social media, retweet us. You're an owner, participate. And you are. I think people lose, it's so not personal that I own 1,000 shares of Apple. I just don't think that Tim Cook knows who I am. So it's very different. Now, if there are 10,000 investors in Reg A Plus, they won't know me personally either. But there is definitely much more of a community, because they will be communicated to regularly. And if the issuer does a good job, everyone will feel connected. So that's part of the job of the issuer, is this, they call it investor relations, but it also could be community building, because you're building that part of your community, because that's going to be key to your growth in the future. If you get 5,000 investors in your CF, how many of them are going to come in on your A+ in a year or half later when they've watched you from where you were to hitting these hurdles, jumping over them, and getting to where you are when you're ready to do the A+. So it's also kind of a joke, because all the time people say, I want to use A+ to go public. And I'm like, don't do that. You don't ever want to be public until your market cap is big enough to be included in an index tracked by an ETF so that you have volume and you're on a real exchange. Anyway, so, with that, I say, no. You need to keep building your company up and getting it to the point where one day you may want to go public. But you can do a lot of private rounds between now and then. Even Facebook waited quite a long time to go public, and a lot of the mega cap companies did, and then did direct listings. So, but if you're Legion, the company that you were talking about, and they wind up with even 500,000 shareholders, going public is not going to be all that difficult when the time comes. They've already got 500,000 assuming they already have 500,000 shareholders.
No, agreed. It is interesting as these companies go through this journey and the impact in so many different ways. And it reminded me once again what I need to do. It's funny. We're in the middle of a hiring, and thank you for reminding me. I got to go back to them. You're right. I'm trying to take away those reminders away. I remember when I first developed one of the corporate governance tools, was the reason we had problems during Enron was because people didn't know what they needed to do at that moment because they couldn't remember. So instead of trying to get them to do that, just put it in a trigger effect. This is just one of those triggers. Hey, it needs to come more. It needs to come more fluidly. And I will tell everyone that we are in the process of ourselves. We've embraced crowdfunding from the beginning, but now internally and externally with our shareholders. So it's a journey, right? And we have the tool. The tool is only one part. The tool is the delivery mechanism. Now you need to make sure you have the other tool, which is the content and how you're going to approach this to make sure that it's meaningful. And it's also continuously, right? That's the other element. But this conversation has been really important for me because we uncovered, I think, for everyone listening in, that there is a lot of great benefits to it. The industry is evolving. There's a momentum. Things are going to change. It'll be interesting what this conversation will look like, and we'll all have it back. I'm going to make a note of it. And I'm talking about around September of 2021. And there's a reason for that. We'll have 2 quarters of the 5 million. It'll be interesting to see how we will be addressing the benefits then with what we have. Because right now, it's no different than in 2012 when we were discussing the benefits of RegCF. Wonderful, utopia. Now we have more substance to it. And I wonder if that will change. I wonder if the fact that broker dealers are getting involved, like Dalmore with RegCF, I wonder if that will have an impact in all of this, right? I wonder, exactly. I wonder if the reports that King's Crowd and others are doing, Clear Rating, what are they going to have an impact in all this?
Well, I want to ask each of you a question. Who doesn't benefit? Who doesn't benefit for RegCF going from 1 to 5?
Oh, I have an answer for that, but I'll let Brian go first.
That is a good question.
Okay, I'll go first.
Go ahead,
and
Oscar.
then
Yeah,
you bet. So for me, it goes back 6 years ago. Well, actually, yeah, 6-7 years ago. So when I wrote an article about where investors are customers, ambassadors in a company, and a VC asked me, who in their right mind would want to have 5,000 investors in their company? But my answer was 5,000 customers. So the real people who don't want this to happen, make no mistake, is the status quo that keeps making money. And the status quo is the venture capital space, which now we're a threat. This momentum is finally a threat to Series A. Make no mistake, Series A is under attack with RegCF. This is without a doubt a game changer right there in itself. That is the momentum going forward. Why? Because Reg A is now a threat to the investment banking. Would you not agree, Andrew, on that?
Yeah, I mean, not at the high end, but yes, definitely at the middle market and at the lower end. So here is my advice to Series A VCs, or Series B would be look at the companies, put up a reasonable amount of money to guarantee that they will raise the full 5 million through a CF, and take ownership with them and be their partner in raising the money through CF, and benefit from having 5,000 shareholders or 10,000 shareholders, because ultimately it will be really good for your fund as well. And I think there are ways that we can work in partnership rather than in competition. But I agree with you, Oscar, that there's going to absolutely be competition, and I'm already there. So, you know, with some of the 5 million ones we're working on, it's like, wow, they could have gone and gotten VC money based on their pedigree and the idea and what stage their company's in. So, you know, I think that's great, and I love working on deals like that. So.
Brian, the floor is yours, my friend.
Yeah, I wasn't going to say that they wouldn't benefit from it, but you know, if we get all of this increased action that we expect, right, the regulators are going to have a lot more to keep an eye on. There's just more and more portals coming out, right? As we mentioned, we'll probably be at who knows, maybe we'll be over 100, you know, by the end of 2021. But then again, going back to the 5 million is, you know, a bigger chunk of change. So it's going to be attracting a lot more people and potentially, you know, bad actors. So I think that the industry, not that it's a bad thing, but we will be challenged, right, to just continue executing as we have been and really kind of improve and mature. And again, using your words, level up, right? We got to level up as an industry. Kind of the venture capital point. I mean, so again, I've never worked at a venture capital firm. I can't, you know, speak from inside knowledge, but as much as it could be seen as competition, I would think that a lot of that really has to do with their mindset around it as well. Because while it could be seen as competition, you know, I think looked at the right way, it could actually be potential opportunity, right? Where there's now all these other ways where you can maybe just get a little bit of skin in the game early on to follow a company that you're interested in, instead of having to lead that round, or, you know, be able to diversify, be able to think of all the data, right? All this data is now going to be publicly, it's complete transparency, all this stuff, which really hasn't existed at this scale before for the private markets. So what are the venture capitalists going to be able to do with that? You know, they can build all their machine learning models and everything else they want probably from that. So
yeah, it's going to be, you are right, Brian. There is a lot of public data, but it's still not accessible to the public the way we want it to. For those who know it, it's there. I do believe that in certain groups within the existing structure of markets, money, they're going to be feeling threatened. Those who are smart enough, like we were fortunate enough to see 2 VCs that did see the day of light, that this is a good thing. It's not a bad thing. Mm-hmm. It's a way to diverse your risk and get in. I don't need them to write the whole check. I just need them to write a bit of it. Let me get the rest from the crowd. Let me move forward. I still need their guidance. They bring value. But I like the analogy that Andrew always says, and sometimes I say it incorrectly, but it's so true. I mean, would you rather have one person tell you about your company? Would you rather have 1,000, 10,000, 1 million? I mean, if your business is a business of serving the market, whether it's a product, solution, or anything, I'll take that one any day. It's a true testament. So it's I'm really looking forward to, you know, what's to come in the next few months for us, and how it's going to push all of us to level up. That's the big thing, that you hear it all the time from us now, because internally I keep reminding our team that we got to step it up. Whatever it was a year ago, it's no longer the case. We got to make it better. I know, Andrew, you got that. So last points from each of you for, you know, the benefits and the RegCF. Andrew, I'll go to you, and then Brian.
So I think we've touched on the bulk of them, that it basically is helping, it can help communities, it can help towns. It definitely is going to help all different types of businesses. And it's interesting with the CF, I've now seen deals that are not software and are not things that are looking to scale to billion-dollar companies. You know, they're looking for an exit at 50 million or 100 million. And I think that that's great. And I'm really happy to help them and to, you know, work with someone who is sourcing organic produce. It's to then make the food. So there's a food company that we're not hired by, but that we're looking at really carefully. And I'm actually going to have some of their soup tonight. So
nice.
Very
nice.
Got to sample the product, right?
Of course.
Yeah,
Brian,
well, because either I'm going to be part of that crowd or I'm not.
Or you're not. Thank you.
Excellent. Yeah. Again, just echoing everything that's already been said and that Andrew said, you know, there's so many benefits for the investors, for the issuers, for the community, for society. I think going to what Oscar said earlier, though, we're still really just scratching the surface. If we think of where we are today, you know, the regulation updates are going to be going into effect on March 15th. You know, it's another good step, but all of this is really still, when you look at the long time scale of how long all this has been going on, it's still just a small part where we've been having a lot of change. So we probably can't even envision some of the benefits and ways that this industry is going to continue to evolve, just, you know, kind of building off the foundation and the platform that we're at today of where we are. So, you know, in short, I don't think there's any sugarcoating. I'm very excited about, you know, where we're going. I'm very kind of bullish for the industry and for everything else. So thanks again, Oscar, for having me on today. It was a pleasure speaking with you, and as well, Andrew.
No, guys, listen, we're going to be back. This is an ongoing education. We all need to do it. You need to do it at CrowdWise, which I know you do, and you're doing it with the CFPA, which are a board member. And I think all of us have to remember that it's not an issue of, I don't see anything in this market as I see everyone working together because the common goal is the same. We want to make this as exciting. So thank you to both. I made a note here. We're going to come back here in September. We're going to have it, and we're going to reflect back on this. And the good thing is this has been recorded. So everything you said will be held against each of you. Just joking. Until then, have a wonderful week to both of you. Thank you so much for being with us today. For everyone else, thank you very much. We welcome your comments, feedback. You can reach our speakers. You can go to KoreSummit.io. You can see the video there. You can see their contact details, completely transparent. You can reach out to them, ask the questions you like. Until our next KoreSummit webinar, have a great week. We'll talk to you soon. Take care, guys.